Hi, good afternoon. Good evening, everyone. I'm audible. So we will be starting in 2-3 minutes. We'll wait for the more participants to join, then we'll start. Hello, everyone. Good evening. I think we should start now. And meanwhile, more participants will join. Let me share my screen. Please confirm if I'm audible to everyone. Okay. So thank you so much, everyone, for joining. Our today's topic is basically on sustainability reporting, which is we can call latest IFRS S1 and S2. And so today we are going to cover this session on the agenda items. First of all, we'll give 5 to 10 minutes to introduce the IFA and IPA, including the annual membership renewal process for the members. So bear with us who are non-members who are going to stay with us for this webinar. And then we would be moving to the topic of the day, the setting of context about IFRS S1 and S2, then brief introduction, conceptual framework, and core content. And then we'll move towards the disclosures, illustration, and the challenges. And at the end, we'll see if we have time for the illustrations as well as some year-end reminders, which we have to basically inform to the participants. Um, so myself is Salman Hassan. I'm the fellow member of Institute of Financial Accountants, as well as the Institute of Public Accountants of Australia, along with I'm holding bachelor degree and affiliate of CA Pakistan. So I have worked in different regions in Saudi Arabia, UAE, Bahrain, Pakistan, Afghanistan, China, and Singapore. Um, so I have 15 years of experience in merger and acquisition, IFRS and related advisories, assurance, including financial analysis and business analysis. So I'm also attached with the institute for a couple of years since 2017. So this is my introduction. So as I mentioned, we before we start our topic, we have 5 minute session for the members who has to renew. So before that, IFA, Institute of Financial Accountants of UK is a group member body of IFAC. It's a IFAC full member body, and it's a part of Institute of Public Accountants Group. This institute is since 1916, and the aim of the institute is to put SMEs and small and medium enterprises and partnerships to regulate accounting and finance related matters. Um, we are also collaborating through Infotex's Consulting, and so Infotex's Consulting is accounting and finance related firm, including we have some learning basically division in Infotexes and ERP developments related. So regarding renewal, just to let you know, the renewal is only for IFA the members who have joined the or who have received their membership through IFA, not IPA. IPA renewal is normally happening end of June, like early July, and for IFA members, the renewal process is beginning at the end of December every year. I mean, for the next year, like 2025, we can say. So what members has to make sure, they have to make sure that their personal data is and personal details are fully updated on the portal using their login access. They have to keep update their CPD records. Normally 40 CPD hours they have they have to maintain yearly basis. 20 are unverifiable and 20 are verifiable. They have to, which is mandatory. This is the item which is annual membership return. Without filing of annual membership, let's say if you have already paid the fees, annual membership renewal fees, but you have not yet filed the annual membership return, still you have to face the disciplinary committee, and your renewal process will not be considered completed. So that's why the completing the annual return is very much important. And then obviously you have to pay your annual subscription fees. So how you can access there is a short summary on this slide. You can access using your login, and you can add your user ID password. You can enter your user ID password, and then will directly to this page. And on this page, you have to fulfill your, as I mentioned, personal details. You have to update if you want to, and then you have to file the membership return. And later on, then you have to pay the fees. So these are update the CPD records and then pay the fees. With regards to payments, you can pay it online via debit card or credit card. Otherwise, bank transfers or different methods which are being followed in UK, you can also pay through that. Installment options are also available. I think 3 installment options so far, which I remember, are available, I believe so. So for that, you can contact directly the membership team on the written email ID here or the phone. available. So I think over the phone, I think you have to members has to basically contact now. Like within 4 next 2 to 3 days. The reason is Christmas holidays will start and you may miss the installment options. So this was all about the renewal process and about IFA. Again, I'm just mentioning you have to complete your annual membership return, update your CPD records, and then make the payment. So now we are moving towards the topic, which is we have already mentioned sustainability reporting on the IFRS S1 and S2. Um, so as per the agenda item, first of all, before we start the introduction of IFRS itself, we would like to set the context so that we will grab the knowledge what we would like to aim today. So the first thing is what is ESG? So anyone can answer what is ESG? So quickly you can mention in the chat, or if you need, I can open up the mic. Okay, so yes, I think someone has raised the hand. Yeah, Paula, you can talk. Okay. Uh, so basically ESG, everyone is aware that we call E for environmental, S for social, and G for governance. So what is E in this sustainability context? Like for example, greenhouse gas emissions and climate related impact. This is environmental impact. Water consumption is an environmental impact. Waste management or deforestation, water quality, air quality, all these are environmental. So uh, what is S? S could be like social impacts in the context of sustainability. Local communities are the part of S factor, and employees relationship diversity and diversity, workforce health and safety, conflict and humanitarian crisis. So these are some examples of social factor. And then we have a governance factor. In the governance factors, normally, for example, how the oversight will happen, how the management benefit alignments, bribery and corruption, or let's say structure of the management and the board committees, etc. So these are basically governance related factors. So why ESG is important for us? So mainly ESG is in the sustainability context is important for the investors as well as the business operations, stakeholders, and the regulations. So okay, so I'm just looking at the question answers. I think now chat box is enabled for everyone, I believe. Can someone please check if it is enabled? You can type. Attend is, yeah, I think if you can type now, please. If anyone can please type. It is enabled. Okay, okay, that's fine. So please, I'm handling the session myself only. Today we don't have our coordinator along with us. So try to be very specific in terms of questions. I have to directly answer you. Okay. So we were talking about the ESG importance. Uh, so investors, as I mentioned, these days investor demands ESG transparency and accountability to assess the opportunity, risk, and industry positioning. They also have a concern on the improved capital access and returns. Rather, they just don't want to avoid a stranded investment. So that's why they are looking for the improved capital access and returns. Another thing the investor are demanding is a recent trend favors recent trends and favors ESG practices, which is basically with regards to future investment, and there could be some requirements from large institutions for as their investor perspective. So business operations, they also have contextual importance for the ESG, mitigating the climate risk, as well as, let's say, a decreased cost of operations, or let's say competitive differentiations. Like the business operations, they want to be proactive in ESG implementation to safeguard the competitive positioning. So this is the context with regards to ESG importance for business operations. So similarly, stakeholders also look ESG as an important phenomena for this sustainability, like increased customers awareness. So these days customers are really aware about green initiatives or so. So consumer prefers green products and companies that are active in ESG initiatives. Similarly, there could be a reputational improvement, and the another example can be increase employee productivity. For example, strong ESG positions boost the employee satisfaction and productivity and attract and retain the talent. So that's why ESG context is important for stakeholders. And similarly for regulators, regulations, as everyone is aware, the compliance with emerging ESG requirements or regulations across different regions, Asia or Europe or America's regions, they have their own emerging ESG regulations. So mandatory ESG disclosures rules are setting up the stage for the company to fulfill their social responsibilities and comply with emerging regulations such as the like the here today ISSB reporting standard. So that's why ESG is important. Um, so the next one is where to begin. So if we say where to begin is basically, first of all, we can identify the importance of an entity for to first develop a sustainability strategy. There is a context for materiality assessment. We'll discuss about it later in detail. And then identify the key sustainability KPIs metrics that would need to be tracked. And then what is the source of data? So these are the items which we have to begin with. And then based on that, we can measure and we can develop a thorough process of identifying the appropriate inputs and measure the outputs against those inputs, and then measure the underpinned by robust underlying controls and processes. So this is the way we can start identifying ESG sustainability factors and then measure it. And then last thing is report. Like we can decide the purpose of reporting, and then determine the stakeholders who are the users of the report, then decide on what reports and how it should be developed and what reporting standard to be applied. So these are the factors to begin. So when we talk about the available framework and reports, so we can have three frameworks available. which can help us to develop this ESG initiative. The first one is Global Reporting Initiative. Global Reporting Initiative is an independent non-profit organization that leads a global multi-stakeholder process to develop and refine the different practical sustainability reporting. So another framework available is a task force on the climate-related financial disclosures. So TCFD guidance provide the information to investors about what companies are doing to mitigate the risks of the climate changes, as well as to be transparent about the way in which they govern. And another framework which we are going to discuss today is IFRS S1 and S2. So these are the framework available, which from there we can begin with. Okay, so what was this international status? What are the international sustainability standards? So in 2021, basically I should not say in 2021, but before 2021, and up to 3rd November 2021, the IFRS Foundation, they made an International Sustainability Standard Board, which is separate from the Accounting Standard Board, which is responsible for establishing the IFRS sustainability disclosures. So this ISSB has uh, so far developed the two standards, which are effective from 1st January 2024 for the year-end reporting. Okay, so before going further, I think we have one hand raised. So I think again, Paula, yeah, you can please speak. I think I'm lowering her hand. So we have question answers. Okay, that's fine. Okay, so moving to the next slide. So the brief introduction about S1 and S2. So what is the scope or objective of IFRS S1? IFRS S1 is also known as the general requirement for the disclosures of sustainability related financial information. It sets out the general principles and the requirement for entity to provide sustainability related financial information. It aims to ensure the investors and the other stakeholders receive comprehensive, relevant, and comparable sustainable data. So, and similarly, the objective of S1 is primarily is to ensure the sustainability related information is integrated into an entity's financial reporting, and also offer the holistic view of its performance. And it also focus on how the sustainability issue impacts the enterprise value and provide the common language for reporting across the industries. So basically, S1 is more on the general requirements for the disclosure on sustainability related financial information. Mainly, I can say what are the risks and the opportunities to be disclosed in the financial statements, and then the objective is to have the enterprise to have a common language for reporting across the industry. So we are going to discuss in next few slides. So similarly, S2 is more particular on the climate related disclosures, and also climate related different risks. Uh, it is more detail about the climate related changes, particularly physical and transitional risks, and along with the opportunity of those. So also build on the recommendation. This S2 is built on the recommendation of TCFD, which we have already discussed. It's a framework available, task force on climate related financial disclosures. So S2 provides the investors with the information about the entity's exposure to the climate risk, and how those climate risk related risks can impact future cash flows and enterprise values, and also to encourage to disclose the company the opportunities uh, arises for the transition to a low carbon economy. So these are the basic uh, understanding of S1 and S2 and the differentiation between them. Effective date, I'm telling the effective date right now, rather at the end of the session. The reason is it is almost year end, and the um, any company who is having or their financial year is beginning from the 1st January 2024. For those companies, they have to disclose certain um, disclosures of S1 and S2. So that's why informing you about the effective date right now, so that you will be attentive, and we can have more fruitful discussion on the upcoming slides. As I mentioned, the adoption or uh, effective date for the standard is annual reporting periods beginning on or after 1st January 2024. So when we say the word annual is important here, so it means this standard was not applicable for the interim periods, or quarterly reporting, or half yearly financial statements of 2024. So it's for annual reporting period basically. So earlier adoption is permitted uh, if any entity applies this the and they adopt it early before 1st January 2024, they have to disclose the fact in the financial statements or the reports, as well as they have to apply S1 and S2 at same time. So for the sake of exclusion, so for greenhouse gases emission related disclosures, I think we call it scope 3. They are excluded for 1st January 2024. So those will be applicable from 1st January 2025. Because this is the first time adoption of the IFRS, so comparative information is not required in the first annual reporting, and similarly for the first interim periods in 2025, let's say half yearly financial statement of the listed companies. For those, again, comparative information will not be required. Local jurisdiction will decide the effective date when, like, different countries, regulators will decide when they are going to implement the standard in the respective jurisdiction or countries. So far, if anyone has a question, otherwise we'll move towards the core part of the standards and the discussions. So this standard, today, what we are going to discuss, it's more theoretical and looks boring, but this is very much important and could be exciting for upcoming years. Okay. Um, Normally SOCPA is always adopting the standards when those have been implemented. I just saw a communication, or basically some discussion on Tadawul portal. So they have mentioned that the company should disclose this ESG in their financial statement in 2024. Other than that, I don't have so far information for SOCPA regarding to SOCPA, but I can answer this later on as well. Okay, so moving to the next slide. So we have a conceptual foundation. So conceptual foundation is then we have core concepts as well. For the sake of discussion or for the sake of convenience today, I have divided the whole context into conceptual foundation as well as the core context, so that we can try to grab the knowledge accordingly. So conceptual foundation is like companies would like to report on all significant sustainability related risks and opportunity that could be reasonably affecting the company's prospects. So those has to be disclosed in the financial statements. So it's these are extra disclosure. It's not going to be a on financial on balance sheet. Normally, those are off balance sheet disclosures. So information on the disclosure topic is if it is material and influencing the decisions of the investors. So these two conceptual foundations are very much important. So as I mentioned, the first item is fair presentation. A complete set of sustainability related financial disclosures shall present fairly. Uh, all sustainability related risks and opportunity should be disclosed. So fair presentation requires disclosure of relevant information about sustainability related risk and opportunity, and as well as the perspective is to have the faithful representation in accordance with the principles set out in the standard, and to achieve the faithful representation, the entity shall provide a complete, neutral, and accurate depiction of those sustainability related risks and opportunities, including the climate related risks. So another important aspect in the conceptual foundation is materiality. As everyone is aware, all the IFRSs are designed for the material items or material disclosures and classes of transactions. So an entity shall disclose the material information, like standards normally says about it. And in the context of sustainability related financial disclosure, information is material if omitting, misstating, or obstructing the information, and that is reasonably be expected to influence the decision of the primary user of financial statements. So that's why, and materiality doesn't mean like the any fact is being omitted or misstated or obstruct. Similarly, in the context of materiality, uh, aggregation or disaggregation is also an important factor. So let's say if an important has a different like an atom and two items have a different in are different in nature, so those should be disaggregated. Just to manage the facts, we cannot aggregate the any context or any risk or opportunities or climate related risk. We cannot aggregate if they are different in natures. So this is the materiality related context. So moving forward, connected information. This is also a conceptual foundation. Um, so entity will provide the information in a manner that enable the users of the financial statement uh, to towards the connected information, like the connection between the items to which the information is related. Like, for example, if I give examples within sustainability related financial disclosures, such as like on the governance, on the strategy, on the risk management, which we are going to discuss in the next upcoming slide. So whatsoever the information we are going to disclose, it should be connected information, and it should be across its sustainability related financial disclosures and other general financial reporting related information. So in the upcoming slide, we are going to discuss the core concept. So whatsoever should be disclosed, it should be uh, connected information. So this is a fundamental requirement of the standards, both standard S1 and S2. Okay, before we move to the core concept, if anyone has any question, please. So in Q&A, S1 for general. Okay, we have one question. S1 is for general requirement and S2 is for specific to climate. What about other components of ESG? Okay, other components of ESG, I'm not sure what you are trying to say, but ESG is environmental, social, and governance. So S1 and S2 both are for ESG, but S1 is as a standard is only governing on the general information or general requirement with regards to ESG related risks and opportunities. So basically ESG related risk and opportunities to be disclosed as per the requirement of S1. So in S2 is particular relating to climate related changes or risks. So both are for ESG context, but S1 is generic with regards to risk and opportunities, and S2 is specific to the climate related risk. Hopefully I would have answered your question. Okay, so any other question? Um, Okay, does gap has anything similar to it? So which gap? First of all, we have to understand. But normally, I'm not sure it's a US gap or UK gap but normally, all the jurisdictions, especially Western and America's related jurisdiction, they are always having their own standards, which could be similar to S1 and S2, and they would also be implementing accordingly. Okay, so moving to the core concepts. So for core concept, we have four main agenda items. One is on the governance. So governance is basically, it's also a disclosure requirement, like disclose the organization governance around the climate related. It's more specific on the S2 as well. So disclose the organization governance around the climate related risk and opportunities. So like for example, describe the board oversight of climate related risk and opportunities, and also describe the management role in assessing and managing the climate related risks. So these are the disclosure requirements, and objective is to achieve like governance bodies, which can include a board or committee or board of directors or shareholders or equivalent any body who are responsible for oversight of sustainability related risks and opportunities. So how responsibility for those sustainability related risks and opportunities are reflected in terms of reference, mandates, roles, descriptions, and other related policies applicable to that entity, or similarly to those individuals or bodies within the context of governance. So governance is important core concept of these two standards. Then we have strategy. Strategy could have it's very detailed. Like strategy itself has further sub areas. What are the risk and opportunities? How those are being strategized, and business model and value chain. How it is linked to the strategy and decision making. Then how the strategy is linked to the financial position, performance, and cash flows of the company, and then resilience. So we can try to quickly talk about the strategy and the related context. So strategy is basically the disclosure of the actual and potential impacts of S1 ESG related including the climate-related risk and opportunities on the organization business, and strategy and financial planning, where such information is material. So this should also be disclosed in the financial statements. For example, recommended disclosures could be describe the ESG related and climate related risk and opportunities the organization has identified over the short term, medium term, and long term plans. And then describe the impact of climate related risk and opportunities on the organization business, how it is impacting the business, its strategy, and the financial planning. And another thing is resilience of the organization strategy, taking into consideration different climate related scenarios. For example, like temperature or let's say carbon emission or anything which is impacting the environment. So these are the certain disclosures which we have to disclose as per the strategy of the entity or its organization. So if we talk about the subcategories under the strategy, so we have risks and opportunities. So what kind of risk and opportunities can be disclosed? For example, those risks and opportunities, as I already have mentioned, which can reasonably be expected to affect the entity's perspective or users of the financial statement. Specify the time horizon, which is important, like short term or medium term or long run impact on the sustainability related risks, and explain how the entity define these time horizons, like how they are defining is as a short term, medium term, or long term. So short term, medium term, and long term horizon vary entity to entity, and it depends on the factors which is impacting the each entity, its business cycle, or its investment, or its cash flows. So these are about the risk and opportunities, particularly with regards to S2. The climate related risk and opportunities could be like industry based disclosures and topics. So industry based disclosure and topics and industry based guidance for the implementation of IFRS S2, as I mentioned earlier. TCDF is a framework which has illustrated industry-wise different risk and opportunities, as well as the guidance. I cannot cover those now, but if anyone can go to the standard and they can refer to those document, and they will find such particular guidance, topic-wise guidance or industrial guidance over there. How the business model and value chain is important for this ESG. Okay, so the description of the current and anticipated effect on the sustainability related risks and opportunities on the business model itself and value chain, like the entity should disclose a description of where in the entity's business model and the value chain such risk and opportunities relating to ESG are concentrated. For example, is the concentration is due to geographical area or the facility itself or the type of assets. So business model and value chain context is particular with regards to concentration of any factor. As I mentioned, geographical area, it could be facilities, and it could be type of assets as well. Then we have the next subcategory of strategy, which is strategy and the decision-making context. So with regard to ESG, the companies or entities has to disclose how the entity has responded to or is planning to respond the sustainability related risk and opportunities and progress against those plans, including the quantitative and qualitative information and the trade-offs between the sustainability related risks and opportunities. For example, in making a decision on the location of new operations, an entity might have considered the environmental impact of those operations, and another example can be the employment opportunities for those areas and communities. So strategy is also impacting the trades-off between the sustainability related risk and opportunities while setting up new operations, for example. So the company has to disclose how they are managing such risk and opportunities. With regards to S2, particular environment, the itself, entity's business model, including its resources allocation to address the climate related risk. This is important. And similarly, let's say, including the plan to manage or decommissioning of high carbon emission plants, and how to manage the energy or the water intensive operations. So these are the additional contexts which the entity has to disclose in the as per the requirement of S2. So similarly, there could be more examples like for the sake of strategy and decision making in S2, it would be like development through the capital expenditures or additional expenditures on the research and development to make like more sustainable investment. So along with it, what are the current and anticipated direct mitigation and adaptation efforts with regards to production processes and relocation of facilities and workforce and etc. So there are many things like standard is saying a lot about the strategies and decision making processes. So I just try to summarize a few. The next item is financial position and performance. I mean, no need to mention in detail, but how that strategy is impacting the company's financial position, performance, and cash flows in the future. So the entity can disclose such facts as well. Resilience is to understand its capacity to adjust to the uncertainties arising from the sustainability related risks, and entity can disclose the qualitative disclosure with regards to the capacity to adjust to the uncertainty or uncertainties arising due to these sustainability related risks. Okay, so risk management. Risk management is the third core concept in the within the context of S1 and S2. From its name, how the company is managing the risk, and the company or entity has to disclose how the organization identify, assess, and manage the climate-related risk. And the entities can also describe how processes for identifying, assessing, and managing the climate-related risk are integrated into the organization's overall risk management strategy. And the last one in the context of core concept is basically metrics and targets. So basically this is the measurement, I can say somehow, and targets are definitely to be set for the future outcome and measuring against the risk management processes, governance, and the strategies, everything. So the companies can disclose or entity can disclose the matrices used by the organization to assess these risks and opportunities, which is in line, and it should be in line with the strategy and risk management process. So, for example, disclose the scope 1, scope 2, and scope 3 greenhouse gases emission. So there is a context we may talk about later. So such disclosures when are and how those are required. Describe the target used by the organization to manage the climate-related risk and opportunities and its performance against the targets. So definitely when the matrices has been designed or certain KPIs, or I can say for the sake of simplicity, has been designed, so those are measured against the target, any actual performance versus the target performance, that should also be disclosed in the financial information. Just two additional items here, which is basically just we will little bit talk about. We can talk about the physical risk and transitional risk and judgment or certainty. Then I'll move to the questions. With regards to physical risk, just to differentiate between the two different type of risk which are being defined in the S2. So climate related physical risks. So physical risks resulting from the climate changes that can be event driven, like acute physical risk. There is for the subcategory, it's acute or chronic, or from the long-term shift in climatical pattern, which is chronic risk. So acute physical risk arises from the like weather-related events, such as storm, flood, etc. And chronic physical risk can arise from the long-term shift in climatic patterns, including the changes in the, like for example, temperature that could lead to a sea level rise or reduced water availability, or etc. So these are the physical risks to the climate. And similarly, the transitional or transition risk, which is different from the physical risk, is the risk that arise from the efforts to transition to a lower carbon economy, towards the lower carbon economy. For example, uh, let's say in any country, if they impose any regulation on the carbon emissions, so how the entities will face such transition risk from and can convert their investments or infrastructure from the high carbon emission, let's say, plant towards the low carbon emission plant. So that transition we can say is transition risk, climate related transition risk. So for example, those risks would be just because of policy announced by a jurisdiction, or just because of legal issues, or technological issues, or reputational risk. So this is the way physical risk and transition risk are being differentiated in S2. Just last item in the core context, which is judgments, uncertainty, and errors. While preparing the sustainability related financial disclosures and financial information, entity may make various judgments apart from those involving estimations that can significantly affect the information reported in the entity's financial statements or financial information disclosed in the financial statements. So in this context, the judgments are like standard is allowing to make the entities and the entity standard allows the entities to make various judgments. So there are further guidance in the different paragraphs of the standards. So how to measure the uncertainty? So entity shall identify the amount that has been disclosed that are subject to high level of measurement of uncertainty. So they can also disclose the amount which is uncertain, which is certain. So in this context, I think IS 37 can also be applied. And similarly, with regards to error, an entity shall correct the material prior period error. So standard is also allowing, S1 is also allowing the company if they would like to correct the material prior period errors by restating the comparable or comparative information for the sake of error correction. And already IS10 has also mentioned if it is impracticable to do so, the correction of error, so that can be avoided unless otherwise the prior period related errors can be corrected. So this was the core concept of S1 and S2. I'm now moving to the questions. Okay, I think I have one question, maybe. Let me see. Okay. Okay, I think nothing is so far. Okay, so moving to the so this was I can say the today's webinar is more on theoretical, but let me see if the next few slides could be a little bit practical, and we can move on. Okay. Now, with regards to core concept, the climate related opportunities and their financial impacts. So here we are just trying to summarize what we have discussed in the previous slide. So as we mentioned, so the S1, even S2, by the way, is talking about the risks and the opportunities to be disclosed in the financial statements, where S2 is very much particular about the climate related risk and opportunities. So as we mentioned that the risk could be of two type. One is political, like risk are of two type. One is transition, and another one is physical. So in transition, we have already discussed it. It could be because of policy and legal, technology, market, or reputation. Then physical risk, let's say on the weather, is it acute or chronic, or how it is how these risks are impacting. And other way is opportunities, resources efficiency, energy sources, product and services market resilience, and those opportunities would be converted into the core concept, strategic planning and risk management, and then we have to assess its financial impact. And that financial impact we have already discussed is can be determined from the different factors of core concepts, and it can be converted into everything may not be converted, maybe not be converted into quantitative factors, but only qualitative. But if it can be, so we can see the impact of those risks and opportunities in terms of financial information, which can impact income statement or cash flow or balance sheet and blah. So this was the summary on the core concept. Now, moving towards the disclosure requirements. After this slide, we'll try to discuss the practical issues. So far, if anyone has any question, please, you can either raise your hand or you can type in the chat or Q&A. Okay, so disclosures, whatsoever we have so far discussed in detail, that should be disclosed. I'm just trying to summarize here. So S1 is mandating the disclosure on the governance and management oversight of sustainability risks. We have to disclose. And then we have to disclose the strategy and how the sustainability related risk and opportunities are opportunities affecting the entity's business model. Then how the company is managing the risks process relating to those issues. And then again, it's basically the disclosure is on the core concepts, so which we have discussed in the previous slide. So metrics and the targets which are used to monitor the sustainability performance. In S2, S2 is again kind of similar disclosure, but particular with regards to climate risk. So you can see here the governance and management oversight for sustainability risk in S1, but in S2, it's more on towards the climate related risk. Then potential impact of the climate related risks on the entity's strategy and its business. It's similar to S1, but more particular to climate related risks. Then risk management for the climate related risk. And then the last one is again the metrics and the targets which can be used, for example, to such as like greenhouse gases emission and carbon reduction goals. Okay, so with regards to disclosures, the essence of the standards are in S1 and S2 is apply across all the industries and promote the consistent approach so that it allow the comparability between the organizations rather the sectors. So the standard is very much clear here. So the application of the standard should be comparable on organization rather a sector. A sector is a broader category, but it may not have similar context or issues of the organization. So that's why the comparability should be at organization level rather the sector level. In S2, again, already it's same like S1, apply across all the industries, promoting the consistent approach. This is also applicable on S2, but in S2, they, as I mentioned, they have already TCFD framework has already mentioned the kind of guidance, high level guidance, which reinforcing the emphasis on the transparent and decision useful climate related disclosures. So you can refer those guidance and accordingly you will see the industry wide such guidance. But again, it should be comparable at organization level rather the sector. Okay, now the important concept is okay, where to disclose. Where to disclose, standard has not mentioned anything very specific because this is so far off balance sheet items. These are so far off balance sheet items, so there is no particular place to disclose. I mean, it could be a second last note or the not may not be note one, but it could be a second last note or there could be a particular number for that. So there is no single location is specified. It can be in each note of the financial statements. It can be disclosed. Cross-referencing is also allowed. So we are going to discuss here. For example, let's say the companies who are issuing the annual reports, so they can make an integration of information in the management commentary. For example, whatsoever has been disclosed in the financial statement, it can be linked to the management commentary as well. So for example, another example is where the companies are issuing a separate sustainability report. They can cross-reference sustainability report related information, which has also been disclosed in the financial statements as well as in the management commentary. So standard is allowing the cross-referencing, but the important aspect is those annual reports or management commentary should be released at the same time of financial statement so that it should be cross-referred. Okay, now just one example, the illustrative disclosure I have just, in the essence of time, I'll just give one example. For example, it's here we have taken the example of a utility industry. So what sort of disclosures can be given or risk and opportunities can be disclosed For example, greenhouse gas emission and energy related resources. So they can disclose the uh, emission one scope and percentage covered in such emission. Similarly, greenhouse gases emission associated with the power deliveries, or let's say long-term and short-term strategies and plan, and also the how they are targeting to reduce such performance to such risks basically. So similarly for water management, there could be how much total withdrawal of water, how much has been consumed, and how it can be like high consumption across the regions, or where it could be a low consumption or high consumption or baseline water stress level, number of incidents of non-compliance associated with the water quality permit and standards and regulations. So similarly, the description of water management risk and discussion on the strategies and and practices to mitigate those risks. So with regards to workforce and health and safety related, the total recordable incident rate or fatality rate or near missed frequency rate or different incidents can be measured and disclosed in the financial statements. So questions, I think, let me see. Yes, this is mandatory for all the companies who have adopted the full IFRSs. And SOFA related endorsement, um, I have to check again. I have read an article. So in that it was mentioned that for listed companies it was this was the article relating to Tadawul. So they mentioned it companies should adopt this in by this 2024 for the financial statement of 2024, but software related endorsement I have not seen so far. Okay, so moving to the next slide. I think we have 3 slides left to wrap up. Okay, the challenges and the what challenges now uh, I can say across the regions are being faced. There could be like educating the board of directors, management, as well as those who are involved in the reporting about the company's exposure to the sustainability risk and opportunities. So this is the key challenge. Sorry, this is basically the key recommendation to the challenge. And similarly, the key action recommendation could be preparing for more scrutiny over the sustainability related financial disclosures. And the next one could be establishing a clear governance structure that is supported by effective cross-functional collaboration between the department. And the next one could be assemble a working group that will be responsible for reporting, establishing the clear roles and responsibility based on individual skills and expertise. So these are the recommendations. And the last one is calculating the different resource opportunities, like say scope 1 and scope 2 greenhouse gas emission. So, or like say carbon emission or water related KPIs. So all those calculations to be measured. So challenges which the market is facing these days. Um, there could be a chance that companies in across the regions or including Saudi Arabia, they would be producing separate sustainability report, but is it really uh, aligning ISSB requirements or not? So those has to be looked into. So this is again, we are referring back towards the uh, action recommendations, which is more scrutiny. And similarly, there could be some practical challenges with the companies, and those could be building issues or expertise of resources to measure the risk and opportunities. and the extent of reporting and framework to be followed. Like if already companies applying GRI standards, how do they will transit, or let's say if they are following any local standards for sustainability reporting, then how they can transit from that standard or gap to ISSB. Then the data processes and the controls are also a challenge for this new reporting, sustainability reporting. Cost of implementation is also important, like is it cost effective or not for the entities, and how it can align to the strategy of the company, is it, or strategy of any geography as well. So these are the key recommendation actions and the challenges. I think we can skip this slide because we have already spent the time on the core content. If anyone has any question, otherwise I'm just moving to the different topic, which is just I'll take 3 or 4 minutes on that. Before that, if anyone has any question, please you can raise your hand or you can type in the chat box or Q&A. Maybe we have one question. I think it is mandatory only for the listed company in the main market. Yes, yeah, it can be right as I mentioned. It is mandatory for those companies, but there is no guidance on the companies who are not listed or not even a secondary market. Yeah, but there is the silence regulator, I think, should clarify this. Okay. Okay, so we have a question. The companies are making provision of any uncertainty as per IS 37 or specific standard like IS 16 for decommissioning. So how S1 and S2 could be differ? S1 and S2 is basically is only so far designed to disclose the risk and opportunities, general risk and opportunities, as well as the climate related risk and opportunities. Um, Yes, in IS 37 is specifically talking about the provisions and uncertainties, but the approach in IS 37 is more towards the measurement of or either it should be disclosed or not, regarding measurement as well as the disclosure requirement or not. But here S1 and S2 is again it will be applied on the materiality basis, but here you have to disclose the risk and opportunities all together, considering the materiality level. So the requirement is just not to calculate, but also to disclose in a qualitative way as well. It's not just a quantitative. So far, it can be a qualitative factor as well, like IFRS 7 note, financial management or note, which the companies are disclosing. So there could be S1 and S2 note as well in the financial statement. It's not necessarily impacting the balance sheets or financial information, but it's like extra disclosure for the investors and the stakeholders. So that's why it is different from that. Maybe in future we will have S3, S4, and so on, which would be particular about the own balance sheet requirement or the linkage towards the IS 37. So far, it's more generic disclosures. It could be called quantitative uh, as well, which can impact the decision of the users. So the next question is, there is the timing, there's the time giving to apply this. Yeah, so for the annual financial period, um, starting from 1st January 2024, these standards are applicable, but as we have already discussed, for main markets who are listed, for the companies who are listed in the main market on the Tadawul in Saudi Arabia, they have requirement to disclose, but for the rest of the companies, we are not clear whether it should be applied or not. Okay, so so far I have answered all the questions, I believe. Okay. The year-end reminder, it's a different topic. It's just because year-end is about to close and all accountants or auditors, they have to start for the audit or year-end closing. So just I'm reminding, so these could be the areas which we have to take care during the if year-end financial close, which is revenue recognition, impairment of non-financial assets, and ECL model implementation or roll forward for the on the previous years, actuarial valuation, inventories, NRV, provision and contingencies, leases, modification on the lease, or new leases to be added or incorporated. So this is just a high-level context about the year-end reminder. Okay, so that's it for today. Uh, Again, I'm looking forward if we have more questions. At the end, again, I'm reminding all our IFA member who has joined through Institute of Financial Accountants of UK, they have to file their annual return and they have to update their CPD records and pay the annual subscription. This is really important, otherwise they may have to face the disciplinary committee. And we are going to send the already IFA is also sending their personal emails, and I'll also be sending WhatsApp group messages so that you can renew your membership before 31st December. Okay, so I think no more question. Okay, we have one question: how to add unverifiable CPD? If you can please drop me the message on the WhatsApp, and I can explain you. Okay, thank you so much, everyone, and uh, yeah, thank you so much, everyone, and have a good night. Right.